So guys, we're going to be conducting a review for the weekly forex forecast that was shared last week. You would really find few mentors that go all the way to share forecasts on a weekly basis and possibly daily. But you see, I do my best to do that. Even at times I share setup in the free Telegram community. I'm doing this so that those who are learning from me would actually see the practical delivery of price and how what you're learning works in the market. You get it? You would really find few mentors that do that. I'm not scared to do that because I understand the model I'm using. So for the student to be able to get what I'm really applying and using, then there should be a real-time practical examples to those things. So that is why you see at times I share setups and I conduct some of this weekly forex focus so that you can see how this stuff works. So, basically last week I told us to anticipate more bearish movement after we see a bullish movement. I was looking forward for us to see more bearish movement aiming to this main threshold of this bullish order block. Last week we conducted the weekly forecast for the DXY, the Euro USD, the GBP USD, AUD USD, NZD USD, USD JPY, and the gold pair. And basically, what really played out fine was the gold pair. So that is why I told us we have to be very flexible to have a new narrative to price delivery. When there is a change in narrative in the market, then you really need to be flexible and then follow the new narrative that price delivered. So what we can clearly see, and I do emphasize to most of those that have learned through me to most times allow Monday to trade because Monday served as a manipulative day. So it's a day basically where the institutions will manipulate the market. So at times I just encourage that you just allow Monday to trade so that you can have a clear perspective to where the market is heading for the week, even though you've conducted your weekly forecast. Are you getting it? Because the institutions basically would use the Monday to manipulate price movement. I'm not saying don't trade it, but I'm just giving you my own perspective to that. So basically now what we can see from the AUD USD, and I want to make use of the AUD USD because I've been making use of the Euro USD. Basically I trade the Euro USD and gold. So I want to make use of the AUD USD and NZD USD for this particular review. And why I want to make use of this is so that you can also be convinced that this model works across the pairs. You get it? But basically for gold works clearly, but we shouldn't restrict gold to the model of the London and the New York sessions. We get it? Because at times gold has correlation crack with the DXY. So what we can clearly see, last week we identified this fair value gap, how this mitigated that, and we had this bearish movement. But what I failed to really acknowledge last week was how this candle took out this weekly liquidity, took out the low. And then we had the close of volume to the upside, and it closed above the 50% of this candle body. Basically, I told us to anticipate bullish move before we frame that bearish movement to the downside. When we go to lower time frame, I'm going to share those perspectives clearly. But basically now, through the week, what we had was just a full bullish week to the upside back into this fair value gap. I told us that this fair value gap has been mitigated by this candle. So if we're going to have a bullish movement, the possibility is that the bullish movement would mitigate this candle week or just take the high, and then we have that bearish movement to the downside. But what we can clearly see from what happened during the week is that we had more bullish movements to the upside. So basically now, let's refine the fair value gap left. This is actually now the fair value gap left because from this candle low to this candle high. So now when we drop to the daily time frame, so let's get to the daily time frame. So from the daily time frame, what I showed us last week is this is our draw on liquidity, this particular sell side liquidity. And I clearly showed us this bullish fair value gap and how price respected this bearish fair value gap. And now, I told us we're facing resistance and also support at this institutional sponsorship zone. So basically from the 4-hour time frame, I clearly showed us we should expect to see if price breaks through this daily bullish fair value gap, then we should expect a return to retest it because it's going to act as an inversion fair value gap. Then we have the bearish continuation to the downside to take out the sell side liquidity. But basically now, when we go back to the weekly time frame, what we can clearly see from the weekly time frame, we have the sweep of this liquidity. based on the CTR, basically the candle range theorem that I've been teaching you guys in the other sessions that you guys have seen in the drive, which is already made available for you guys to go through, where we basically look into also the concept of the power of three. You can see how I was dealing with the daily candle, looking at the daily dealing range. So also now we can see in the weekly perspective, we have the sweep, and then we have volume close above, even above the 50% of this bearish candle body. So, we should expect more bullish ride before we can frame any bearish movement to the downside. But basically, price just went to the upside. We already can see that there is a sweep of liquidity here, and basically, price mitigated this order block. Even though I was expecting to see that price would dip more lower to the mean threshold before we could have any more strong bullish movements. We can see that last week just gave us a bullish movement to the upside. So back to the daily time frame. So what we can see from the daily time frame, we have this liquidity sweep. So we can see the resistance. Now this is giving us support, this sponsorship zone. So I told us to expect to see a break of that, a return to retest, then we can frame for the bearish movement. And I clearly emphasize that we should allow Monday to trade. You can go back and watch those weekly forecasts. You would know I'm not just here telling you stories. So let's get back to the 4-hour time frame. So basically now we can clearly see that in the 4-hour time frame, what I showed us from the 4-hour time frame, this is a daily fair value gap. And within the 4-hour time frame, we can see this inversion fair value gap in confluence with the daily fair value gap. So we can see how price took out this trend line liquidity, and we can see from the 4-hour time frame mitigated this mitigation block, and now price fell to the downside, facing support at this daily bullish fair value gap. Price returned to the daily bearish fair value gap. So I told us last week we should expect to see the fall. Once price successfully breaks through this bullish fair value gap, then we can expect a retest, because this should act as an inversion fair value gap, and then we have the bearish continuation. But clearly what we saw was just a bullish movement to the upside. So that is the bullish movement we are going to have a review on, and how you would have actually taken entry in that particular price movement that happened during the week. You get it? Because you can also see I was sharing the Euro USD setup, the buy move, when I saw that there was a change in the narrative in the markets. So that is why I told you guys flexibility is really, really very important. So let's just do away with this so that we don't have our chart so clouded. Just want us to have a very clear chart. But let me just leave the zone. So basically our drawn liquidity failed last week. So let's just consider and take that like that. So when we drop to the 1-hour time frame, so we can also see based on those zones already identified from the higher time frame, we can see that being respected to here. And last week I told Mr. Chris to also see that price will just take out this low, this sell side liquidity in AUD USD, and that would end the day, which clearly just happened. You get it? It was because of this bullish fair value gap I saw from the daily time frame. That was the reason why I told him that. And he saw that just clearly happened. So now what we can see is for the sell move, clearly, yeah, this gave us a clean sell model. We can see the fall, the push, the fall. Price gave us a market structure shift, gave us the inducement, return, took out the inducement and fell. But then price failed to just give us bearish momentum, because there is a bullish fair value gap identified from the daily time frame, and in confluence we identify a 4-hour inversion fair value gap, which clearly also from the 1-hour time frame we can see that. So price just returned to that zone. That was why I told Mr. Chris to anticipate to just take his profits here. You get it? To anticipate to see that price will just take out this sell side liquidity and we may just have a reversal. That was what I told him. That was just it. So now what we can see, this is the delivery that happened last upper week, and then we projected more bearish movement for this particular week that just concluded. So now, but that failed. Monday just gave us bullish impulse. So upon the break of this bearish fair value gap, then we should know that price would want to retest this bearish fair value gap, because now the daily bearish fair value gap is now going to act as an inversion fair value gap to render support to price, because it's just like saying based on the support and resistance trading methodology. But basically, these were really identifying institutional sponsorship zone. So once an institutional sponsorship zone gets violated, institutions want to retest that zone. You get it? So that is what would just happen when we see fair value gaps being violated. We would see price return to retest them as an inversion fair value gap. So now basically now we're going to now go to our 15-minute time frame, and then that is where we're going to be making the application of the power of three concepts. You get it? And then we'll now look at the delivery of price in a daily perspective, and then we'll now return also to check out that in the daily time frame, and then mark out the highs and the lows. Basically, we've identified structure is just bearish to the downside. From the weekly to the daily, let's get back to the weekly. We can see that structure is bearish, but then there is a mitigation of this order block. And now we can also see from the daily time frame that structure is just bearish to the downside. We can clearly see that. So from the daily time frame, we really do not have an inducement liquidity here when price took out this inducement liquidity and fell to the downside. So this would act now as the ideal inducement liquidity if price is returning to the upside. And what we can see, the week gave us a bullish move. So that is what we are going to have a review on and see how you would have utilized the change in the narrative of the price delivery for you to take the bullish move. Because now we have the sponsorship zone, refining the fair value gap. This is what is left. This is the first fair value gap. Price return back into it. Price just left this now. So if we are seeing bullish move, then we should know that this is the draw on liquidity and this is the sponsorship zone. We should look and see how price would return into it. Are you getting it, guys? So now basically now we're going to now replay price, and then we're going to look at how we should have taken our entry. So since we know we had a bullish week, basically now this high becomes our draw on liquidity. And what I clearly showed you guys from the weekly time frame that I failed to really consider and take into consideration properly is how price swept the low of the previous week. Let's get back to the weekly time frame. So we can clearly see price swept the low, took out the sell side liquidity, but volume did not close below it. Are you seeing it, guys? Volume did not close below it. And then we have this bullish movement to the upside. And price closed above. We had up close week. So, I told us that when we see sequence of 4 to 5 days of a sell, we should expect bullish move. And that was what just happened. So you can see that at times, even the person teaching you can have, how will I put it, may not really see some things also. You get it? He might also make mistakes. And that was what just happened. So we can clearly see that, basically from the weekly perspective, this is our weekly high and this is our weekly low. This already swept liquidity. So if we're going to continue bearish, we could see the possibility of price taking this buy side liquidity, previous week high, before we continue bearish to the downside. So let's identify the previous week high points and the previous week low points. So we can clearly see this is a previous week high point and the previous week low points. We can have that here. Let me put that well, guys. So we can clearly see we've identified the CTR, the candle range. Now let's go back to the daily time frame. So here we are in the daily time frame. So we can see this is the weekly range. Now let's go to the 4-hour time frame. We can also see from the 4-hour time frame, this is the weekly range. So since basically I've explained all of these things, let's do away with this particular ones here because we won't really need them again. So, basically now our attraction is the buy side liquidity, meaning our draw on liquidity now is the buy side liquidity. So let me change this color so that we can clearly have that marked and seen properly. So this is our draw on liquidity. Let's identify and mark that out. So that is our draw on liquidity. So which is our buy side draw on liquidity. So now let's get to the 1-hour time frame. So this is the 1-hour time frame also. So now, in the 15-minute time frame is where we'll be framing our concept, looking at the sessions. So, this is AUD USD. So basically, AUD moves more in the Sydney session, which basically starts around, that should be the 17 p.m. hour of the New York time zone. So this is the 15-minute time frame. So let's get back to the 1 hour time frame, and let's just play price from the 1 hour time frame and see what happens on Monday. So let's play price to see. So we can clearly see what happened on Monday.